But we just need to be aware that this rally, I think, will come to an abrupt end, but it still might not be for another 5 or 7% higher from where it is right now. So you don't want to be fighting this trend. You don't want to be trading or investing on fundamentals or news, because it's going to put you on the wrong side of the market almost all the time.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
Welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. Well, markets, we've got new potential gold-backed currency. Markets have been holding on. Inflation numbers going down. Are they real? Are they fake? What effect will they have? That's what I'd like to know. And the person you're about to hear from, our great friend over at technicaltraders.com. And, well, hey, it's really great to have you on again, Chris. And so, first off, let's talk about gold, silver, hot markets today. We're looking at gold, up over 1%, silver up nearly 4%. What do you make of it?
Yeah, well, we're definitely seeing a big pop in precious metals and miners today. I think we're seeing, I was looking at the charts earlier in the week, and when you look at the longer term chart of all of them, they're setting up for a really nice potential bottom here and a bounce. And we're starting to see that as of you and I speaking here. We're seeing gold up, 1.4, silver up 4.5%, gold miners up 5+%. So we're definitely getting a nice rebound. They have been a little bit oversold. They're all down at kind of a support level. And from a technical standpoint, a bounce here makes really good sense. The question is, how high is this going to go? Is this a quick news-driven pop? Or is this going to have some legs and we see gold maybe go back up to that 2080 level and test kind of all-time highs? And that's going to be the big question is this just a news pop and drop, or is it the start of going back up to test that high again for more or less the fourth time gold will be up into that upper range and potentially see if it gets rejected or breaks out?
All right. So what about the BRICS countries announcing the intention to issue a gold-backed currency? I have my reservations about it. I'll believe it when I see it, because if it's, what'll happen there, it will just, if a currency was actually backed by something other than air or the full faith and credit of the country that issued it, it would become the most valuable currency, and then you would have Gresham's law take place, where bad money drives good money out. People would hoard the currency and use the so-called fiat currencies to buy everything they need. What's your take on it?
Yeah, I mean, we've been hearing about, people countries wanted to start gold-backed currency for a long, long time. So it'll be interesting to see if it actually comes about. Maybe there's some legs behind this one, but it really does, I think, put a lot more perspective to investors that gold is more serious of an asset. A lot of passive investors who aren't heavy into the market still feel like gold is kind of that weird asset. It's kind of outside the norm. And, if it does become another currency, I think it's going to really spark for a lot of different investors, young investors, to maybe take it more seriously and realize gold's always been a currency, just not a fiat style currency. And I think this could give it legs and make people want to accumulate it, want to stockpiling it. As you said, everybody might want to just move to that currency, and because it's backed by something.
Yeah, well, Martin Armstrong says it would basically end international trade. I don't know about that, but I do know that that when you start monkeying with the reserve currencies, you wind up having issues here for sure. So moving on, gold and silver look like they could go higher. We have to see, because they were kind of heading lower, but with all the uncertainty, geopolitical uncertainty in the world, who knows? Looking at the stock market, last time we spoke, you were very bearish on it. Hasn't collapsed yet. We got these dovish inflation numbers, which seem to indicate there could be an end to the Fed interest rate hikes, to the tightening, as it were. Where is this heading?
Yeah, I mean, the markets have been on a super strong trend all year. Long term, as you mentioned, I'm bearish long term. I'm not betting against falling prices yet. We have been long the market since April, but long term, I do think we're going to go into a much bigger correction in the stock market. But obviously, this year has been kind of a tear your face off type of rally for more so the Nasdaq, but the SP 500 is starting to catch up and move higher as well. You got to be long the markets here. I mean, the trend is up, both from a short-term standpoint, a longer-term standpoint, but we just need to be aware that this rally, I think, will come to an abrupt end, but it still might not be for another 5 or 7% higher from where it is right now. So you don't want to be fighting this trend. You don't want to be trading or investing on fundamentals or news, because it's going to put you on the wrong side of the market almost all the time. So again, follow price. You got to be long the markets. Tech and growth stocks are doing exceptionally well. We're definitely seeing money pile into the growth stock sector. Good gauge of that is to look at the ARK ETFs like ARK-K, ARK-Q, all of those. They're up huge in rally mode. They've been gaining some traction. And we're also seeing the put-call ratio, which is very low and is starting to linger at the lower range. And the put-call ratio is telling us how much leverage to the upside people are buying. And right now, everybody is more or less buying leverage to the upside, expecting higher prices. So we're definitely seeing a feeding frenzy of people piling in the AI, the tech. The momentum is to the upside. And now everybody's piling into the really fast growth stocks and leverage. So we could see a very strong move up here over the next week or so in the stock market, but it could hit its head in resistance and run out of steam and come back down just as quickly. So this is definitely a trader's market since really the beginning of 2022. You've got to be very aware. These rallies have always been met with huge waves of selling that last several months. And right now the markets are strong, but you got to protect it because it could roll over down the road and have a pretty big haircut in price.
All right. So one sector that's crucial to the economy, global economy for that matter, is housing. These housing stocks have been on a tear. They're trading at 5-year highs, and in an environment with higher interest rates, that's kind of counterintuitive, isn't it?
It is. I mean, I just did an article on the real estate market. And when you look at the U.S. real estate, whether it's single family dwellings or multifamily, all the signs are there. The momentum has shifted. It's actually a very bearish sign in terms of the real estate market. About to run into some serious headwind. Things are good right now. It's typical seasonality wise. There's always a big surge in new home starts. But multifamily housing is by far the most popular right now. And every time we've seen multifamily housing starts spike up and make new highs, it's usually a few months just before the housing market actually reverses. And so like the home builder stocks like you talked about have been on fire, and there's a big disconnect between those and I think the actual real estate kind of markets. When we look at investors buying these home building stocks, of course, people right now are getting bullish on the stock market again. People are very bullish right now in real estate because this is just when real estate has got demand. People are looking to move and all that through spring and summer. But overall, I think we're going to see a very sharp correction in the housing stock space as well. But right now, it's just a sweet spot in terms of seasonality wise and market sentiment in the real estate kind of space. That you don't want to be missing this, or you don't want to be jumping in. I think at this point, I think it's actually very close to seeing a very big correction in the housing space, but it's definitely on fire, and you don't want to fight this trend or pick a top yet. So it's just one of those plays that everybody's piling into it, and people are going to be buying probably around here near the highs and looking back months from now, going, "How did I get into these stocks like right at the peak?" Because I do think there's a huge turning point in real estate. All the charts, all the stats are showing a massive reversal, but we're still, again, I think several months away from that really taking place and people seeing it hit their home prices and the housing stocks.
Yeah, so sell in July and move away, huh?
Yeah.
Well, Home Depot, which hit a peak in December 1 of 21, it's trading about 25% below its peak. Still, it's been muddling along, and you would think that would definitely be an indicator of housing, both for renovations and new housing. A lot of builders buy their materials there.
For sure. And copper's kind of a different commodity, but copper's used huge in housing. Copper's underperforming. It has kind of a bearish looking chart. It's way off the highs. It's not a great sign for the overall, the overall space. And, even this year, when you look at the stock market, everybody's like, oh, it's an amazing year. NASDAQ's up like 30 something percent. The reality is, if you go back and you look at the highs from last year for the NASDAQ's still off by like 9%. The buy and hold portfolio is still down 15% from the highs, or 14% from the highs in 2021, 2022. So, even though we have this huge rally this year, everybody's thinking, everything's good and it's a really strong year, but really the market is just clawing its way back up to recent highs. It's not like it's exploding into new highs. There's all kinds of new opportunity. This is just, to me, a big relief round, bounce and rally that I think is going to eventually fizzle out here. As you're seeing, rising rates, not good for the stock market, not good for the housing market. Momentum on all these things are shifting, even though there's been a strong rally this year in stocks. This is, at this point, still nothing really more than a big technical rebound before I think the market's head a lot lower. And it's going to be interesting to see what happens with gold. We've seen massive moves and pops in gold and silver, like we're seeing as you and I are doing this interview in the past. And they only last a few days and they roll over, and then we see them hit new multi-week or multi-month lows after that. So you got to be aware of any big pop in an asset based around news. A huge emotional wave, they're usually short-lived. So the market right now is really trying to suck everybody in, get them back into the markets, get the money in there. And once the majority have committed, that's usually when you see a big reversal take place. But it's like a stampede right now for growth stocks still. And this week, it seems like there's going to be a little stampede into the precious metals space. Question is, does it have legs behind it, or is all this going to fizzle out, a few weeks from now, a few months from now, and everybody will be looking back going, why did I get in way up there?
Okay. And as you mentioned, it's July 12th. We're having a rally. CPI numbers just came out today. They were tamer than expected. And Wall Street's having the celebratory orgy of buying. What's your take on inflation? Is it past us? Is it over? Or is the worst yet to come?
I would like to think it's maybe peaked out. It's kind of just, I don't know if it's going to go much higher, but I think it could linger up here for a while. I think we could still see these rates kick around like this for maybe another 3, 6, 9, 12 months. I don't find this type of thing reverses very quickly. But I do think once it reverses, I think we're going to see the inflation start to drop very quickly. So the question is just kind of holding out and seeing, when it starts to roll over. And I'd like to think we'll be back down to some better levels, 12 months from now. But of course, that's going to require a whole bunch of different things. We need the markets to start a correction, and then we'll go into a recession. We'll see layoffs. We'll see, all kinds of things take place. And that's when everything will start to, the bubble will start to deflate, and we'll start to see pricing kind of get reevaluated and repriced for the new kind of economy. I think everybody's still in this mode of buying up everything, and they feel like they're going to miss out, that things are still going higher. That momentum is stalling, but we're still in that feeding frenzy mode a little bit. And until that reverses trend, that momentum, that long-term momentum reverses to the downside, I think inflation is going to just kind of linger up here at these levels for a while.
All right. And energy prices, what is your crystal ball telling you for them?
Yeah, crude oil, topped out 2022. It's got a very similar chart pattern that we saw back in 2007, 2008, in terms of its spiking and then correcting down and then breaking down another big level once a big bear market actually takes place. 2022 was a bear market, but I really think that was just kind of a topping phase in the stock market. I do think we're going to have another major leg down. And that will send crude more or less tumbling sharply lower. And I think we could see crude oil potentially get back down into the $40 range, maybe back down even to the $35 range. If we were to fast forward, 6-12 months from now, it could definitely be a whole lot lower. It is hanging on to a thread where it is. And it's the same with the real estate. If you were to look at the real estate charts, we've got the same peak and the same pattern we saw back in 2007, just before we went into the housing crisis and the stock market crisis. Everything is aligning for like another move like the 2008 market correction. So people need to be aware. It's pretty dangerous times potentially around the corner. If you don't protect your money, you might end up really regretting it down the road, because the markets can wipe out wealth in a matter of a few months. You can lose 20-50% of your life savings just because you don't protect it from the downside. So that's what I focus on, is all about asset protection. Protect your capital. When things are good, we grow it by leaps and bounds. When it's dangerous, we tiptoe around very cautiously and are very defensive with our positions, and we don't hold assets that are falling in value. It's way better even to sit in cash, collect some interest, than it is to hold something going down.
Hey, well, that's why you should go over to the technicaltraders.com, check out the site, think about a subscription. Is there a sample subscription that FSN listeners, viewers can take advantage of, Chris?
We have a free newsletter that they can join, and from there you can download a PDF on how the markets work. The main stage is a really good infographic, and of course I share some of my videos on there and reports, so you can get a taste for what I do. Kind of similar like what you and I are doing, except for I share my charts and I walk through that every day with the markets and comment on the sentiment, what's moving and shaking each day.
All right. Hey, as always, we appreciate your coming on the show, enlightening us with your trading knowledge. Chris, if you got a question for Chris or myself, shoot me an email, kl@kerrylutz.com. The link to Chris's site is in the show notes to this interview on financialsurvivalnetwork.com. While you're there, sign up for our free newsletter as well. Chris, we'll talk to you in a little bit and see how this trade unwinds.
All right. Thanks, Kerry. Take care.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.